Hi, everyone. So we took the 12-month stock pick performance from October the 1st, 2020 to October the 1st, 2021. And my team's just given me all the results of that performance. I want to share that with you and how we picked those stocks and how we got the results that we got. So let me share those with you. You should be able to see them on screen over here. These are some of the names. Don't forget, it's from October the 1st, 2021 to 1st of October 2020 to 2021. All right. So 12-month performance. And this is some of the stocks. Doesn't mean you'd pick them today. It's not what I'm saying. They're not today's stock picks. This is looking at the historic performance of what happened since the ones we picked. Now, how do we go about picking these? What was the rationale? I'll come to that in a second. You can see they're both from European exchanges, UK exchanges, and US, NASDAQ, New York Stock Exchange. There's a variety of performances from some which were up 100%, some which were up 50%. For the purposes of this exercise, I've not put any stop loss. So for that reason, you'll see some losses larger than you would have incurred because you wouldn't have waited for a 53% loss. Our normal stop loss is 25%, and then we're out. Okay, some did incredibly well, like M&C Saatchi, as you can see across the board. So what were the common characteristics of these companies which are on my approved list? It's all part of my great investment program. The characteristics were, we looked for companies which ticked every single box for valuation, revenue growth, okay, dividend yields, cash flow as measured by CROCI, which is cash return on capital invested. It's a formula invented by Deutsche Bank, used by Goldman Sachs Wealth Management. Don't worry, you don't need the private bank's $50 million to be a client to get access to that. We reverse engineered it, as it were. We also looked for Sortino, which meant consistency of outperformance of the market, and we wanted companies with the highest possible Sortinos and alpha, which was outperformance of the market. But Sortino gave us consistency and upside volatility, which is good because you want to be outperforming the market. So on a reward risk basis, they were good. And momentum, we wanted near-term momentum as well. The reason for that is this: we don't want to be gambling whether it's value stocks or income stocks or growth stocks, which are the vogue. We want to tick all of those boxes. And why do we look at European, UK, US stocks? The reason is we want to have 10,000 CVs that we examine, and then we narrow that down to the best of the best, which is, this is last October 2020's approved list, and this is now the performance now that 12 months are up. Why do we look at 12 months? Again, there's research to suggest 12 months, then review, and you can see there's a whole range of market caps, a whole range of sectors. You see, by having the greatest gene pool to choose from, we naturally had diversification. We didn't buy every single one of these. We couldn't possibly. Well, it wouldn't make sense after all, because we'd end up putting too little capital in every single one. We tend to pick 15 to 20 from this. Now, if we were unlucky, you might pick 15 to 20, which included the negative ones. But given that there's so few fallers and the majority are risers, chances are, let's just assume you'd get to the average for the whole list, which was just shy of 40% per annum, which is our target. So that was nice and convenient. We're going to do this every single month for the approved list. Follow me on Telegram, follow me on campaignforamillion.com, and you'll get lots of free education there as well. Thank you.